Let's take a closer look at some key stocks and sectors. Our next guest is seeing value in web browsers, Coke bottles, and fracking suppliers. Here with more is Brian Frank, CIO of Frank Funds and Frank Value Fund Portfolio Manager. Brian, thanks so much for joining us. You were basically saying that tech, as you see it, is cyclical. So what, tech out, value in?
Yeah, absolutely. We feel like this is the golden period for value investing. It looks like it could be a lost decade for index funds because they're heavily weighted towards tech. And tech is very cyclical. People don't tend to realize that when they get excited about all the growth that happens in tech. But as we've seen with Meta and the other earnings reports coming out, it's pretty cyclical.
What do you make of this divergence that we're seeing? I mean, you mentioned during the break that it's interesting to see how even with disappointing earnings coming from these mega tech names, that's not necessarily dragging down the rest of the market. That's a bit different than what we have seen in the previous quarters.
Oh, absolutely. And I think it's kind of a sign of healthy market function. The market actually cares about fundamentals again. The last few years, it was just about what's the Fed going to do to make everybody rich and drop money from the sky. And now it's about, oh, is your company actually profitable? Are you actually growing? And that's a sign of good market function. However, there seems to be things under the surface that are showing a lot of weakness. So it is something to be concerned about.
Well, and you said it kind of reminds you of 99 too, right?
It does remind me of 99, 2000, which was that golden period of value investing. All the value investors looked kind of stupid in the late 90s, not buying those tech stocks. But then, boy, was there a reversal. And value stocks actually went up in that period when the NASDAQ melted down about 80% from its highs.
So where should investors be now? Because you're looking at some interesting names here. You're looking at Opera. Tell us a little bit.
So Opera is a tech company, but it's a lot less cyclical, we think, because it's just a web browser. It's the largest independent web browser. And the way a web browser makes money is when you actually type in to do a search. So it's a growing business. They used to only focus outside the US. Now they're focusing more in developed markets, and they're having some great success. But what most attracts us to that company is they're doing something that the big guys can't. Because the valuation is so low, they bought back 20% of the company in a very short period of time. So they have the cash to do it, they have a low valuation to do it, and big tech just can't compete with that.
Another name you say you like, Coca-Cola, you say this one's recession-resistant.
Sure, yeah. You cut out the cruise, you cut out the big vacation, the big spending, but you don't necessarily cut out the day-to-day treats like Coca-Cola. We like a company called Coca-Cola FEMSA, which is a distributor in Latin America, and their largest bases are Mexico and Brazil, which have actually had a stronger currency this year against the dollar. We just saw from Jared about the meltdown of the Japanese yen and the euro, but the Brazil and Mexico are actually getting stronger against the US dollar. Those economies look to be doing okay, and they're growing a lot of volume coming out of COVID with their Coke.
And
Coca-Cola, I should say.
Going off the US dollar, I mean, tell us what you think. How should investors be positioned given the strong US dollar? I mean, should they be in multinationals that are offering services and abroad and getting a lot of their revenue from abroad? Where do you see things?
So in the Frank Value Fund, which is the value fund that I run, we focus on companies that have control over their prices. So in a multinational, if you have a great brand, you can raise your prices when you're facing inflation like that. For other people who are more dependent on other companies or maybe a commodity or something, you don't have that pricing power. And it's been a bloodbath this year, I think, across the board, even though we're actually up in the fund, kind of finding some good values. However, you have to be very careful. And I think those multinationals will be able to raise their prices if they have a good brand.
With that said, though, we have seen a bit of a softening in the dollar when you compare it to where things have been, in part. Some would argue because the expectation with the Fed is that they'll at least move a little slower, if not a pause, in terms of the rate hikes. When you look at what goes into the fund, I mean, how do you factor that in? What is your outlook in terms of how significant those FX headwinds will continue to be?
We hope that they slow down, but when it comes down to it, even if the Fed pauses, they're still the most aggressive central bank in the world, and it's going to keep the dollar strong. So that's good for companies that are buying goods that come from abroad, but if you're exporting, it's going to be a tougher market. Try exporting to Japan. The purchasing power has declined so much out there. So I know people get excited about a Fed pause, but you got to ask, why are they pausing? They were talking about being so aggressive, and now they're pausing, maybe there's something wrong with the economy. So that could be a whole nother leg down for stocks you have to watch out for.
Yeah, yet another trigger for those recession fears. Brian Frank, CIO of Frank Funds and Frank Value Fund Portfolio Manager. Appreciate your time today.
Thank you very much.